Hello, everyone. Welcome to Multifamily on Zoom. Thank you so much for being here today. I know a lot of people are shopping if they are not there yet or enjoying the holidays or traveling right now. But those of you who are still very loyal to us and show up, I'm sure some people are still coming or some people maybe still thinking about us. But I really appreciate you guys are here. And today we have a special guest. Today we have Robert Heitner. Usually he goes by Rob. And he joined us today. That's the first time uh, Rob joined us and then gonna be talking to us. And I like this kind of like conversation because there's gonna be different things. It's not gonna be just multifamily. So I'm really excited about it. So let me introduce Rob. Robert Heitner, founder and principal of Vision Capital Partners, an Atlanta-based real estate investment firm, brings over 25 years of experience in profitable real estate investments. Born in Stamford, Connecticut, and residing in Atlanta since 1982, Robert is a high-energy professional committed to quality service, integrity, and trust. His extensive expertise spans contract negotiation, property transactions, asset and property management, innovation, construction management, financing, and diverse exit strategies. Notably, Robert has successfully closed on over 7,000 acres of land in Metro Atlanta, representing about 150 million in acquisition. His portfolio includes notable projects like Le Jardin, Carter Grove, and an 1,100-acre venture in Gainesville. As a business consultant, he also directed successful ventures such as the $75 million AutoZone Park development in Memphis. And one of the things, Rob is also affiliated and a partner, one of the people who run Lighthouse with Cam Boogerman that you all love and know so much. So welcome, Rob. Thank you
Thank
for
you.
coming here. I truly appreciate that.
Well, thanks for having me. I appreciate, I'm very happy to be here. That all sounds so official. I don't even know what to say. I mean, um, I've done a lot of stuff in my real estate career. Um, I guess let me start by talking about just for a couple minutes Lighthouse Multifamily. So that's the the my latest venture, as C's mentioned, and I am partners with Kim Bruggeman for those of you who know Kim. And Lighthouse is it's a fully integrated multifamily solution company. So we say it's the complete um, multifamily solution. So anything that involves multifamily, we've got the experience um, from acquisitions through operations and disposition. So we also we're owners and operators. So we own, we have an acquisitions team and buy and sell our own properties. So we operate them as well from an asset management standpoint, property management, and construction management. So Lighthouse also has education and consulting. And Kim is one of the smartest. One of the reasons I partnered with her is because she is one of the smartest people I know in the space. She is such an amazing asset manager and goes through the things. She was a receiver, so she worked in receivership. And so she has that dimension of knowledge from working with people with distressed properties or something where it was being mismanaged or underfunded, and so Kim has a really good grasp on all that stuff. Um, so we took it a step further from there and we're taking all of our years of experience and developing a education platform, like an education program, and consulting. So since she is so passionate about being an asset manager, we are having or creating an asset manager mentorship program. So for those that want to self asset manage, we can coach, consult, kind of hold your hand through and show you what you should be looking for and, what works and what doesn't work. Or we're also obviously able to third party asset manage, which we have a lot of clients that we do that for. And then the education side is, we like to call it bridging the gap, because we just feel like there's a lot of education that people go through, but once you get out of that program, there's really a lot of students just don't know what to do with that information or where to take it. So that's where we feel the gap is in the market, where um, we can bridge to take that knowledge that you learned and apply it to a real opportunity, whether it's helping you find properties or helping you underwrite a property to see if it's worth, buying, doing the due diligence phase, all the way from everything acquisition wise to operations once you close on it to, disposition plans. So that's basically what Lighthouse does. So we're very passion based. Kim is, our mantra is kind of passion, purpose, and profit. And Kim, for sure, is the passion and the purpose. And I joke that I'm the profit. Like I'm the one that keeps the train on the tracks and makes sure that we are making money along the way. Otherwise, obviously, what are we all doing this for, right? We're working to make a profit. So, but in turn, we're helping. She likes to say building communities on purpose for purpose. So we're very purpose driven. We're very people oriented. We're very community driven. We like to make sure that whether it's one of our own communities or we're third party managing for a community, that there is a sense of community there, and that's going to drive your consistent occupancy and keep your rents where they're supposed to be. So I'll take any questions in a bit when Suze wants to open the floor for questions about multifamily and Lighthouse and anything with regards to all that. Now I'm going to take a step back to kind of give you guys a background of who I am, how I got there, where I came from, all that stuff, just so you kind of know me a little bit. And that might spark some questions or make you think of something that you might not have, thought when you joined the webinar this morning or this afternoon. So, God, I've been in the real estate business for probably, I don't want to date myself, but since the about 2000. So I'm going to let everybody guess my age at the end if you'd like to see how old I am, and whoever comes the closest may win a prize. But so how I got started in real estate, I was actually in a different industry altogether. Back in the 90s, I owned and operated my own security company, like this in the security alarm industry. So I was a manufacturer's rep. I covered the majority of the country. I had salespeople in offices all over the country. I also started an alarm installation company that installed residential and commercial security systems and access control and cameras and all that stuff. And so, how I stumbled into real estate from that was in my alarm business, in the installation business, I had some clients who were flipping residential houses here in Decatur, Georgia. I'm not sure where all of you guys are, but I'd love to find out, once we start chatting, just to see where everyone's from. But I just stumbled into it because I was putting alarm systems in for, developers or house flippers. And here in Decatur, Georgia, it was kind of an up and coming area. And once they renovated the home and put the appliances in, They were always getting broken into, and all their appliances were getting stolen. I mean, they were literally ripping furnaces out of like attics and stuff. It was crazy. So they brought me in. I put in the security system, and word just got around. From one house flipper, I had like 10 clients, and then real estate agents were referring me to all these people. So I had all this business from the alarm business, and I saw these house flippers buying, say, a house for like $40,000. We're talking like a two-bedroom, one-bath house, beat up, run down, 1950s build. And they would come in and put like another $40,000, let's say, into the renovation. And I mean, I'm talking fully gutting it down to the bones, rebuilding it, new kitchens, new baths, new electric, everything. So they got 80,000 in, and within 90 days, guys, they were flipping it. I hate the word flip, but they were flipping it for 180,000. So they're making $100,000 in 90 days. And so they were buying like 5, 10 houses at a time. So as you can imagine, I was busy putting alarms in, but I'm thinking to myself, wait, why am I not buying these houses? Like, why am I just selling the alarms to them? And so that's how it started. I partnered up with one of the developers. I said, "Hey, if I write a check for 40,000 and buy this house and write the other check for the renovations, how about, you do the work, I'll put up the money and we'll split it, 50-50, be partners." And that's how I got started. So I did that for probably 2 or 3 years, and the market, as we all know, market is a cycle. And when we got to sort of the end of that cycle, and when I wasn't selling a house, when it took longer than 90 days to sell a house, I stopped buying houses. I mean, I just saw the writing on the wall. And I think that's important. You have to really be in touch with the market and the conditions to make good decisions for your business, to protect your assets, your profit, your money, your company, the whole shebang. Um, so that kind of morphed into we started buying apartment buildings, not for multifamily, but to convert them into condos. We did that for a while, and then I was involved in a loft project where we bought uh, a big industrial warehouse down in Atlanta and converted it into a loft project. So that probably gets me to early 2000s, like maybe mid 2000s, 2004, 2005. And I was so burned out from having to work with all these contractors and people. And, so you figure I've got two apartment buildings that I've got 12 units I'm renovating, converting to condos. I've got a loft project where I'm creating like 90 units, and I'm dealing with hundreds of people, and just got so tired of contractors being late or not showing up or not doing what they're supposed to do or doing something incorrectly. I was just fed up. So about that same time, so luckily we were kind of wrapping up the loft project, and I had a friend who had started buying land, and I had invested in it passively. So I knew all about his structure and I understood the business. And I thought to myself, I'm done dealing with people. And I've been through a couple of land transactions, even though it wasn't from acquisition to disposition. I was, in the operating phase. And with land, there's not that much to operate. But so what I loved about it was land does not talk back. Land's not late. They don't show up late to appointments. The land is always, they're not making any more land. So land is always going to appreciate in value. So I thought that was, I found my path. Like that was, the next chapter. And man, it was a big chapter. If I wrote a book, the book would be like an introduction and then a whole bunch of land and then, like talking about the disposition side of it. Um, so I started buying land and accumulated just large tracts of undeveloped land. And we were looking for land that was kind of outside the path of growth. So that was our business model. So if you knew the growth was expanding, or you knew jobs were going to be there and homes were going to get built, we were buying that stuff for like 10, 20, 30 cents on the dollar. And then we would wait for the growth to catch up. And so we were buying it at a good discount. We were also looking at what the municipalities call a FLU. It's a future land use, which shows you all the zonings within a county. And so we were after high density zoning. So if something could, so let's say 100 acres was zoned agricultural, so you could put one house per acre on it. But in the future land use, it was, you were able to rezone it for 3 units per acre, or 5, or 8 to 10 if it was a high density. So 8 to 10 would be like condos, apartments, right? Stuff like that. So anytime I can buy a high density land outside the path of growth for pennies on the dollar, we did it. And from the investment side, what I did was a little different. When, remember, we're talking back in the early 2000s, mid 2000s. Um, I would I networked with some investors, and we can talk about how to find investors and how to close investors and all that stuff a little bit later. But I would find investors and raise 100% equity for each deal. So I would not get a bank loan. There would be no debt, no leverage, no note. I wouldn't owe anybody to anything, anybody anything. And people thought I was crazy back then for creating these funds and buying things with cash. So what happened in 2008? Market crashed, right? So all of a sudden, all these medium to small size developers are all going bankrupt because they're underfunded. Everything came to a halt. And so all the banks now have been taking back these, they would call them toxic assets, because they didn't know what to do with them or how to manage them. So there was about a 2 year period where none of my investors would touch anything with a 10-foot pole. No one, would even dip their toe in the water. And so after about 2 years, when the banks were just flooded with these toxic assets, we created a fund. So instead of going to each individual investor and raising money to close on a specific deal, we created a fund saying we were specifically going to buy raw land and or developed lots. So we raised $5 million, put it, in a fund, which the fund gives you kind of leverage on being able to buy something quickly. If you have the cash, then you drive the negotiation and the structure. So you could buy stuff at a cheaper price. If you can close quick, you're going to usually be successful. So a huge part of my portfolio is distressed property or distressed land. And I love distressed assets, whether it's multifamily, doesn't matter the space, whatever the asset class is. If you buy something correctly at the right price, you're never going to get hurt. You'll never lose money. So that's the number one thing. The biggest thing that I tell my team is we can't overpay for something, because the second you overpay for it, the deal is cooked. Right. So whether it's distressed or not, you always have to make sure you're buying, you're buying right. So basically for the next, fund one ran off, and I ended up buying something out of bankruptcy. There was, Susan mentioned Le Jardin was one of my deals. So that was is an 800 plus acre land deal down in South Fulton. It's the largest piece of undeveloped land still in the Southeast. And we've sold parts of it off, but we're still holding some of it. I have very little land left that I'm holding, and all my focus is in the multifamily space now. But just to give you some context and some background. So, on the subject of distressed land. So this property was purchased back in the early 2000s for $25 million. and a developer got. Um, there's a local athlete that Suze may have heard of, Brian Jordan. He used to play for the Atlanta Falcons, and he was one of those dual professional sports players. He also played for the Atlanta Braves. So this developer partnered up with Brian, and Brian obviously has a whole bunch of athlete friends, right? And he's got raised a bunch of athlete money, the equity side of the deal. And this deal did have leverage in it, did have banks in it. Hence why it went bankrupt. So they spent $25 million on the land, and then they invested another 50 million in the infrastructure, bringing in the utilities, the roads, that kind of stuff. They built this huge entrance with all stone. There was about a mile, three quarters of a mile to maybe a mile of frontage along the road. And so this big stone wall was built leading to the entrance where the road was stone. There was a gatekeeper's house all in stone and a guard house all in stone, and these huge 20-foot double steel, entry and exit gates and all this stuff. So they spent $5 million on stone just for the entrance. And so now they're 75 million in. '08 hits, market crashes, developer goes bankrupt, property goes to the bankruptcy court. So I'm following this because I buy land all in this area, and I really wanted it. Made a bid for it, and they rejected my bid because they took the bid for less money with a shorter close, and my bid was for a longer close. And we could talk about this later also. Due diligence is so important. Whether it's land, it's multifamily, you have to do your due diligence. And due diligence for land is a little different. I would probably say a little easier, just it's more time consuming, where you have to do seismic studies, you have to do environmental studies to make sure that the soil is not contaminated and everything is good in order for you to build. There's no rock underneath the surface, so you're not having to blast, which throws all your numbers away and throws all your profit away. So, long story short, I knew the person who got awarded the bid wasn't going to perform. They just got it under contract and were trying to shop their money. I knew I had my money in my fund, right? And so 30 days later, so they turned it down, and I said, well, when they don't perform in 30 days, if you call me back, the price is going to go down. And lo and behold, 30 days later, they called me back and they said, you still interested? And I said, yeah. I said, what happened? They're like, yeah, the buyer, backed out. I said, okay. And I said, well, the price has changed and I still need my 90 days. They said, send over a contract. So I did. And I ended up buying that land for $3.2 million. So the rest is history. So, again, if you buy something good, you can't get hurt. So that just happened to be a really good one. I've been involved in three really large land deals. One was about 3,000 acres, similar situation. It was like a $50 million project. I bought it for like 7 million. There was one in Gainesville that I bought. That was at 1,100 acres. That was about 25 million. And the rest of the stuff was like minimum 100 acres, but like 100 to 300 acres. And so over the course of my career, I accumulated about 7,000 acres of land in the metro Atlanta area. And stopped buying land about 10, 15 years ago and just been sitting back and selling it off. I thought I was semi-retired, and then I met Miss Bruggeman, and here I am running a multifamily business now. So, it's like the Godfather. You just you can't get out. They just keep pulling you back in. But no, so I really love what I do. Obviously, you have to be passionate about what what you're doing. And if you are, you'll do it well. If you're not, you should find something else to do. Because if you don't like your work, you're gonna come home and not be happy at the end of the day. And I come home and I'm busy, very busy. I'm still running like three different companies, and I might be up till midnight responding to emails or looking at spreadsheets or, trying to set up an outline for a speech I'm giving or something, but I love it. And so as long as you're passionate about what you do, I think you're sitting in the right seat. Um, so, I mean, I could talk for 3 hours about me and tell you all about me. I'm gonna, that's the Cliff Notes version. I'm gonna stop talking for a minute and see if Suze or anyone has any questions, or I'm happy to answer questions, or however you guys want to spend the rest of the time. I'm down for it.
Yes, thank you so much. We do have a lot of questions, but I know I do. Um, yeah, so being in Atlanta, there are some people here that are from Atlanta. Um, so they may have a lot of question for you as well. But
Okay.
for you to get into land and starting really dominating the industry, and I would like to know how different is. I know you did say you run a fund
Mm.
to buy those properties eventually, but like how different is syndication for land when it in multifamily? So how is that usually? How long do you hold it? And as far as give us a little bit more, like, you know, the equity. We know land, like you said, you just said earlier, um, land don't talk back. I like that.
Mhm. Yeah.
I like that a lot. But however, so give us a little difference. You did talk about the due diligence, what you which is different. You still have to do due diligence, but
Yeah.
maybe you have to use expert to do your due diligence more. Well, you still
Yes.
do use expert in multifamily, but
Yes.
differently. We kind of like know who to hire, and I know it's the same for you. But give
Right.
us a big difference because a lot of people here are familiar with multifamily or residential. So give us a little bit more between land, how you do due diligence and how do you do syndication. What's the
Okay.
difference?
Okay. So I noticed one of the things that I had a hard time wrapping my head around when I first got into the multifamily space was the due diligence and structure of contracts were completely different. So in land, it's much more laid back and relaxed. And I don't know if it's just the way the asset class just kind of shaped up, or I have my suspicions of why it's so tight in the multifamily space versus land. But so in land, I'm used to having minimum 90 days, sometimes 180 days for due diligence. And in multifamily space, that's like unheard of. But we're relying on contractors to, let's say, do a rock study on 3,000 acres. You can't do that in a week. I mean, it just
Yeah.
takes a long time. So that's part of it, I think. Plus, the sellers in land, since it's not talking back to you and there's no one living on it yet, it's just more relaxed. There's not a revenue stream sitting on it and all these, lease audits and things you have to do on the multifamily side. So it's different from that from the due diligence standpoint. From the due diligence of multifamily, I think what ruined the market, and I did say ruin, for acquisitions was when money was basically free, right? A few years ago, everybody was jumping into multifamily. Residential buyers, home buyers, flippers, it's where I came from too, that don't know anything about multifamily were buying multifamily assets, and they were um, fighting each other. It was like, not like physically fighting, but, outbidding each other for the property. And unfortunately, what was used as a negotiating lever was the due diligence period. And I walked into a deal that, and we look at a lot of deals. This one, my team really liked this deal, and somebody was going to put down $1 million hard instantly without even a look. And I just said, no, I said, we're not doing it. I just walked away. I don't care how good the deal is. I'm not going to expose $1 million to outbid somebody. And so these residential people who had no operating experience, and we're seeing kind of the fallout of all those deals now, of
True.
the market, is flushing them out, all that bridge debt that's coming due, or someone has a cap rate that needs to be redone. These properties have been mismanaged by these people who have bought these deals, who have ruined the structure of buying deals. So I told my team, I said, I am going to put my foot down and have an impact and change the way the structure of contracts are on the acquisition side. I said, because we're not going to succumb to these terms. We're experienced. We know what we're doing. So I would rather look at 500 deals and find three that fit our buy box and only buy one on my terms. And I've learned that I won't do a deal these days unless I have total control. And I won't do a deal unless it's on my terms. And again, just like buying it correctly, you can't go wrong if you have all those things and you control your own destiny. If someone else is making decisions for you, not a good situation. So that's the due diligence side of it. The money side, the investor side. So syndicating a land deal, you would get it under contract. You would have 90 days, let's say, for due diligence, and then 90 days to close. So it's a 180-day contract. And so typically what we would do when we were in the beginning and didn't have funds or, all this money yet, is we would use that 90 days to spend doing the due diligence, and we're coming out of pocket, probably $150,000 to make sure, it's buyable. And at the same time, we're networking for investors. We put an offering together, or, in this multifamily likes PPMs, we would just call it an offering. And depending on the size of the deal, if it was 1 to 3 or 1 to 5 million, or 5 to 10 or 10 and over, it would depend on how big the investment unit was. So typically our smallest investment unit was 50,000, up to 100 or 250. And so we're looking for heavy hitters, like big hitters. To the less investors you have to deal with, the easier it is for you to manage, right? Because you've got to manage all these investors. You have to communicate with them. You have to be transparent. You have to provide their tax information. There's just a lot going. Like investor relations is like a whole position, basically. And that was kind of my, wheelhouse, because I was the one pitching and selling and closing. For big land acquisitions, I would fly investors into Atlanta. I'd rent a helicopter. We'd fly over the area. I'd land them on the site. We'd walk and do tours. I'd take them back to the airport in the helicopter, and we'd go have dinner. And I probably closed 99% of everybody. That's just a very impressive way to, do a presentation. Suze had mentioned, the funds. So once the market turned, we gathered funds and had them, ready for action, basically. And so that's a little different. You create a fund, you have to identify the assets you're going to buy. You have to identify when you're going to close the fund. And people will generally commit to it. They will leave a deposit. It's usually like 8 to 11%. And then the operating agreement states, if we find a piece of property to buy, that when we call those funds, they have 21 days to send them in. So typically we're trying to close something within 30 days. for multifamily, we're not in full acquisition mode now. I just don't feel like the market is just quite there yet where great opportunities are. There's lots of stuff to buy. And I'm talking to people every day with operational issues or wanting help on due diligence or all that stuff. And people are buying properties. And I think my acquisition team's a little frustrated because they see people buying properties, but we're not. And I said, we're not because it's not the right time for us yet. It doesn't fit my parameters and my structure. And, maybe more of a distressed opportunity, and they are coming. The distressed opportunities are definitely coming. And we thought they'd hit the market last year. They didn't. Everyone just kind of kept stretching things out and rolling caps and, that kind of stuff. So to syndicate a multifamily deal is similar to a land deal, except you have a whole lot less time between in your due diligence phase is typically 7 days or 15 days, or if you're lucky, 30 days. Um, if you don't have money, it's hard to raise money in 7 days or 15 days. So that's where the funds come in. I think
The
it's
fund content.
yeah, it's much smarter to have a fund and just identify your buy box and go out and raise the money beforehand. And then I still wouldn't let my money go hard in 7 days, but I'd be ready to close in 30 if it does check out. And the due diligence from there is a whole lot different. So now you're talking not land, but multiple buildings, right, with tenants in them. And you got to make sure that plumbing is solid. We'll typically hire, some third party plumbers, electricians. Will have the roofs checked out. On our end, what our team will do is go in and do like lease audits and, just check everything from top to bottom and obviously do a full underwriting, market study, comps. Just that's the due diligence, side. It's a little more intensive, less expensive, but more intensive for multifamily.
Wow, that's so much different. And I can really see how due diligence in land take much longer because a lot of those stuff, like an environmental study, there's way more to do, and some of the stuff even have to go to the lab. So therefore, that will make it a little bit longer. But however, what like when you're talking about negotiation and that speak volume. And so when you were raising money, doing syndication for those lands, you say you were the sole person raising the money
Mhm.
and you raised the 100% of the money. So
Mhm.
I know you do have a sales background, as you said earlier.
Mhm.
Um, so when you started, like, did you have, you knew you could do it, or were the time that you felt a little bit, oh, I'm gonna start this, but I don't know how good I'm gonna be at it. But what
Yeah.
what was the moment, defining moment for you?
Well, that's a good question. So yes, I did have a sales background. I always thought I was pretty good at selling because selling is the art of persuasion, right? And so I've always been told I'm charming and persuasive and all that. So naturally, I was just a good salesperson. And I was just teaching somebody this the other day. We were having a conversation at lunch, and someone said, "Well," and it was within our company, and someone said, "Well, if you're gonna try to convince someone to spend $1,000 a month on, a mentorship or an education platform or something, they need to know what it is what they're going to get." So he's like, try to pitch Rob and see if he'll give you $1,000 because I am besides being persuasive, I am the hardest to sell. I am very difficult to sell. I am a very difficult close. But I'm a fierce negotiator. I mean, I am. Yeah, I never pat myself on the back, but I am one of the best negotiators. And I don't know where it came from, but like as an example, I go buy a car, I get the best deal on a car you have ever ever imagined. And so all my friends, when they go buy cars, guess who they take with them to help them negotiate it? Me. So it's a gift and a curse at the same time. Um, but so I knew I was good at selling, and selling is overcoming objections. So if you ask for the order, you don't get it, you have to overcome what you have to find out what the objection is. Why are they saying no? And if you can overcome the objection or objections, then you should get the order, right? So I applied that and my skill in doing it in my prior business to, I didn't know if I could do it and I didn't know if I'd be successful. And to be honest, it was a little intimidating because I was in a space where I didn't know and meeting with people that had a lot of money and a lot more than me. And I'm typically not intimidated by people, but that situation could be a little intimidating. And so, um, if you have a good product and you're personable, you're honest, um, and trustworthy, then people are going to believe in you. And if you have a good product and people believe in you, then it's pretty easy. It's a good formula. So I just started networking like within my own family and friend circle and got introductions to people. So my, circle just kept growing and growing. And I found myself traveling to North Carolina, to Florida, to, people who were retired and living in penthouses in Miami and just needed someplace to put their money. And I was introduced by, a friend. And so I would just go and pitch my deal, which was really good deals. We mentioned before, we're really particular about what deals we would do. And I had a very high success rate of closing people. And so once you get that core of people and once you do your first deal, it's just so much easier every other deal, especially if you turn one and make money like we did. We had a quick turn on one in 5 months, and all the investors made like 270% return on their money. And they couldn't wait to get their money back in. And they were telling all their friends, hey, you need to talk to Rob. He just did this deal. We made 270%. You need to talk to him. And it just kind of grew out from there. Um, so I'm not sure if that answered your question completely, but I didn't know I can do it, but I persevere, and if I take something on as a challenge, I'm gonna I'm gonna work hard at it until I get it done, and that's what we did.
Yes, you have tenacity.
I
So
have ten.
yeah, that's good. Like, yes, that is true. Once you do that deal and people actually make money, they do refer you other people. And because
You
a lot
just
of time people want to see what's going on, they're like, okay, let me check. So then they observing you, and then from there they're gonna get on board.
once you get that first one under your belt, it's so much easier.
Right, right, right,
Yeah.
right. All right. Yes. Guys, if you guys have questions, raise your hand or put it in the chat. And then we can definitely ask Rob. Rob, you also said that you don't think right now the market is the best market to purchase right now,
Yeah.
and your team is not buying. But what do you say to people who say when people are not buying, that's the time for you to purchase? So how do you answer that?
Yeah. So, Isaac on my team, and he is very hungry to purchase properties, and he's been groomed to, um, cultivate broker relationships, and have him maintaining those relationships. So when we are ready, we can just find out what deals are on the market or preferably off the market. I'd prefer to, find something before it hits the market, but. And we're having constant conversations with people who are looking for third party property management, and they have properties in Texas, and they have a fund that's $20 million, and they're going to have another fund next year is $20 million. And my team keeps saying, well, why aren't we buying? These guys are buying. And I said, pretty much don't worry about what other people are doing and just worry about what your own goals are and how you're going to achieve them, because they may have a different business model than we do. They may have different plans than we do, or different ways of operating, or an exit strategy. So it may be working for them or it's not. And I'll tell you, a lot of times it's not, because people are coming to us for consulting help, property management help, and there's just so many factors to make a deal run smoothly and for it to operate correctly and be profitable. So, the reason why we're not is, well, it's twofold. One, I wanted to really build out the service side of our business to help third party clients. And we're very choosy and picky about who we'll take on as a third party client. But I wanted to build out the service side. So when we are willing to take on a third party client, we have the infrastructure to do it beyond just servicing our own properties that we operate, right? And then two would be a market situation where and I'll refer back to land. If it wasn't a perfect opportunity and then I can buy it at below price, I wouldn't buy it. And because it just makes things so easier. So if you acquire 10 properties and 8 of them are good, but 2 you didn't buy right, you just kind of forced the buy because it was there instead of waiting for your perfect, buy scenario. That 20% of your portfolio is dragging down the other 80%. It's taking time away from you operating a perfectly good asset because you have 2 that aren't running right. So I'm picky for that reason, because I like things to run smoothly. I like operations to run smoothly. And I've told the team 100 times, we don't buy just to buy. When you buy, you make money in the front. That's great. You make big money in the back, but you don't make big money in the back unless you're operating it correctly and selling it according to plan. If
Mhm.
your if your deal goes off the tracks, the amount of energy required to get it back on the tracks is a time suck. And we don't operate that way.
Wow. No, I see what you're saying. I think I ran into that myself in 2021, 2020, when everybody were buying. And I kind of felt like, oh, I didn't buy anything. Um, but now I'm looking back, I'm like, I'm glad I didn't buy anything.
Just because people are buying doesn't mean it's a good time to buy.
Yeah, so I kind of like feel good now because I don't have to be in those crazy loans
Right?
and you have all those issues in the back end, especially investors' money, and that's crazy. Yeah, I definitely agree with that because everybody has their own goals and they have their own buy box. So it's better to stick to your buy box than trying to get into a trend. I get
Yeah.
that. Yeah.
Yeah.
Yeah. Eve has a question for you, Rob.
Hey, Eve.
Hi. Hello. I was just wondering if you have any experience or have looked at any RV parks or anything with in that with your land that have you developed any of the land or just you buy it and you sell your land?
Yeah, so RV parks, no. I've been approached to invest in some, but we have never purchased any. I haven't, from my land side or the multifamily side. And as far as the land stuff goes, we would just stop at holding the land. So I would always get offers from builders and developers that would want a JV in a deal, like joint venture. And I always said no. And people always thought I was crazy because, you can monetize, for another layer and an extra. I, for me, it just didn't make sense. And I'm an analytical guy and a numbers guy and a profit guy. And if it takes more time to make less profit then it just doesn't make sense. And so the reason why I never would do it is because, and it was part of my selling or closing statement to get investors to invest, because I had other investors would also ask me, well, why don't we partner with a developer and then sell the lots and make more money? And I'm like, no. I said the way we did it, by just buying the land, finding either a builder or a developer to sell it to, and then we're out, is so clean. It's one transaction, it's one level, it's just one stage, and you're in, you're out. If you JV with somebody, now you're partnering with somebody who you don't really know. And if a lot of times, if you partner with a builder, they will um, offer you a percentage or a true up of like every house, but not until it's sold. So now I'm waiting an extra 2 or 3 years for money that I could have just exited by having one transaction and sell them the whole thing. And I've got my hand in their pockets, hoping that they're not cooking their books, or like I don't know how, I don't control their accounting, or how they do business. So for me, it was just safer, cleaner. Could you monetize it a little more? Yeah, you're just going to wait more time. And I just prefer a clean transaction, in, out, everybody's safe. And once they're out, they want to get back in. A lot less confusing. That was a great question.
I
Yeah.
have another question, kind of sort of the other topic, back to your former experience with security systems, security
Mhm.
cameras and
Yeah.
things that do you have a recommendation for good commercial security systems for what is the good security system in a multifamily uh, apartment complex or for an RV park or things like that?
So, yeah, so I'm certainly well versed in security. And depending on where are you located, Eve?
I'm in California.
Okay. So I was going to say, if it's in Georgia or even in the Southeast, I still have tons of contacts of distributors, manufacturers, integrators, dealers, installers, the whole thing. Um, but I do have lots of friends who are national sales managers or national training managers. So in California, I do not, but security for multifamily could just be the perimeter exterior security, the gates and the fence and all that stuff. Um, Most security systems, like for trailers or for apartments, are now wireless. And back in my day, everything was hardwired. I almost miss how much money I was making selling just wire and cable to distributors, because you had to hook everything. You need a piece of wire to hook up everything. Now it's all, wireless. Um, so, and that stuff is, a lot of it is even do it yourself, like DIY security systems, where you'll have a keypad, everything's self-contained in the keypad. You'll get like two window switches and a motion detector, and even if you don't know what you're doing, you could have that up in an hour and you have a security system for a unit. But to answer your question, if you are looking for recommendations for systems or companies like out in your area, if you want to, just get my information or ask, through Sue's, it might take me a few days to find who like the integrators and the good companies are out there, but I could get you a recommendation for sure.
So, thank you.
You're
Yeah.
welcome.
All right. We'll reach out to you. By the way, Eve is my partner, so
Oh,
Yeah. We're together. But yeah.
so I'll be coming to your house,
okay.
finally.
Well, I've got a 4 knock security system here that you can tour if you'd like to see it.
So,
Yeah.
and I think when you were talking about fun, I'm curious to know, we at the top of the hour. If you guys have another question, please raise your hand. That might be the last question if there's none. Because I don't want to keep you longer. But I think my question is when we're talking about the fund. So when you have a fund, I've never have a fund. I've been thinking about it because that way you're ready when it's time when you find property. Um, my question, like, let's say you have right now you guys are not buying
Hmm.
and you guys have people's money. So how you guys do you guys pay interest on those money? So how does that work?
Yeah, so I don't have a fund sitting and waiting since we're not imminently buying. We are still looking, so I still do see a lot of deals every day, and Isaac is still talking to brokers and whatnot, and I'll get some deals through side channels that he doesn't even know about that are off market, and we'll look at them, but I won't even let him underwrite it unless it's something like, a slam dunk distressed deal that just makes sense. And then I would just syndicate it, and I would call up one of, four or five people that I know would either put in 1 million each, or I'd say, hey, I'll give you 10% of this deal if you come up with all the money, sort of thing. But the way the fund works, at least the way I would always structure mine, was that it would, whatever the interest you are offering your investors, right? It could be 8% or 10% or 6%. I've seen some as much as like 13, 15%, like if it's a first time fund, to entice people to jump in it. Um, they pay their down payment or their deposit, and then the interest doesn't start. The clock on the interest doesn't start until you deploy the capital. So you call it, say you have a closing on the 30th at the end of the month. You would call that money to be wired in 2 days before, and that's when the clock starts ticking on your interest. So it could sit there for 3 months while you're deciding on what to buy, and it's not costing you any interest.
Okay. So those fund are more like a fund just for a project. It's not like an open fund where people actively
Yeah,
raising.
you'd have to close the fund out. So,
Okay.
open or closed, you would say, okay, I'm raising 5 million. And then when you get to 5 million, the fund closes, or, you have a certain date to close it. If you only get to 4.5, when it closes, it closes. And so now you have a $4.5 million fund, but until you call it out, until you call the money and they wire it in, you're not obligated to pay any interest.
Okay. That makes sense.
Yeah.
That makes sense. Yeah. Do you guys have any more questions for Rob? I certainly do, but
If you think of
I
any,
guess
you could
I
always
can
email. You can always email them, or I'm happy to keep talking to whoever has a question afterwards. Just shoot me an email, or shoot it to Susan. I'm happy to answer anything I can.
either way, do you have phone number for Lighthouse in case somebody who wants some help with
Uh,
Lighthouse, or do you have email you can type in here? Mentorship. You talk about the mentorship for asset management, and
yeah,
I'm sure a lot of people here may be interested.
yeah,
And
um,
if you can put those things in the chat.
yeah. I would say the website would probably be the best.
Why,
Uh,
why, why?
yeah, let me see if I
Light,
can find where the chat is.
lighthouse.com.
It's Lighthouse Multifamily Solutions.com. Let me see if I can type it.
I'm typing it.
Okay.
Solutions.com.
Lighthouse.
Lighthouse multifamily solution.com.
Yeah.
Okay.
Multifamily. I said to these people, can't we have a shorter website name? And they're like, nope, that's what it is.
Yes, I type it in here so people can reach out if you guys interested into. Do you guys still do property management? I know asset management, but I don't know.
Yes. Yeah, we're
Okay.
doing asset management, property management, construction management. Um, And then, everything from acquisition to disposition, education, consulting, whatever anyone needs help with, more than likely we will be able to help.
Yes, 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 yes. Well, thank you so much for coming here. I know it's a holiday, everybody's stressed and busy and but you still make time to come here for us, and we truly appreciate you. And that's the first, that's not gonna be the last. I'm gonna tell you this right now.
Okay. Well, thank you, Suze, and everybody. And it's been a pleasure, and I really enjoyed it. And thanks for having me. And look forward to maybe jumping on another one sometime.
Yeah, so sometime next
Thank
year,
you.
I'm trying to get the my program running for next year, my schedule.
Okay.
All right, guys, thank you so much. It was
All
such a
right.
pleasure having you. And next week will be the vision board. If you're still interested, I will let you guys know what to bring for the vision board, and we can go ahead and start right before the new year. That way we'll be ready for the new year. Have a good one. Merry Christmas.
Merry
Merry
Christmas. Nice
Christmas.
meeting
Thank you.
everybody.
Thank you, Rob.
Bye.
Thank you, Sue.
Take care, guys.